why would oil names, why should we think about them differently as long-term investments? Or are you just suggesting these are trades because of how underweight or neglectful everyone is, and then you want to get out of them at some point after they rally? Like, how are you thinking about these when you're recommending people to look at them?
Sure. I mean, I think those are pretty good analogs because, steel and coal are boom and bust, just like energy. But I think unlike those two groups, energy's sort of centrality is much greater. I mean, energy is by far the largest commodity. It's a meaningful percentage of GDP, and it is used in all incremental activity. If we see GDP pick up, as you were talking about, 4%, you don't necessarily use more steel. But if we start to see people get on planes and business resumes, gasoline and energy consumption rises in lockstep with that. So I think its sensitivity to GDP is so much greater. And even if we talk about weaning off this, it's going to take years, and cutting supply is actually huge for the sort of price equilibrium, which is what matters to the stocks.
Yeah. Tom, before we let you go, I do want to get your take on the broader markets here right now. It looks like, 4,300 price target for the S&P before year end. How do you see us getting there? And I guess, how do you look at valuations right now based on everything we've heard as we're just starting to come into an earnings season now?
I think the market's actually pretty healthy. I mean, I think the risk reward is still really good right now for someone even wondering, is it too late? I don't think it is, because as Josh said, it's not just the Fed and Janet Yellen causing stocks to rise. Stocks are systematically rising everywhere because it's telling us earnings growth is probably better than we expect. But imagine for the last 10 years, the average investor has allocated 0% of their incremental savings to stocks. 94% of all savings for the last 10 years went into bonds. If some of that is now going into equities, let's say the next 10 years that reverses, you've got a massive tailwind for stocks to re-rate. So I think the risk reward is really good here.
Shepard Smith here. Thanks for watching CNBC on YouTube.